Welcome to the webinar with Mr. Firoze Andhyarujina, hosted by GemAtlas. GemAtlas is a global B2B networking platform for the gems and jewelry industry. We help you connect with new businesses and professionals around the world. We can easily start generating new business leads through our platform. We are honored to have Mr. Firoze Andhyarujina share his valuable insights. Our topic for today is the Union Budget 2020 and what implications it might have. Please feel free to enter your questions below and have them answered. On to you, Mr. Andhyarujina.
Friends, the talk on Union Budget 2020-21. In the first place, this budget, which was presented by the Finance Minister, is perhaps the longest budget speech, spanning for more than 2 hours, 40 minutes, and still not completed. If you ask me how to describe the present budget, I would say that the present budget is a directional budget. It gives direction to certain sectors, which is of great importance. And I think giving the direction is extremely important because this paves the way of how the country would progress in the coming years, and also how you would make it a 5 trillion economy. The first major trust in the budget is agriculture. I think all what the Finance Minister and the government laid down in the budget on agriculture deserves great merits. Agriculture, horticulture, cultivation, along with that increase in the yield of crops, better distribution systems, better way of network distribution. I think all these are very, very positive steps, coupled with the fact that the remuneration and the earnings of the farmers would increase. India being an agricultural economy, I think it is absolutely essential for the government to take positive steps on agriculture, crop cultivation, irrigation, and to that extent, the government, according to me in the budget, what parameters, what guidelines have been laid down, in my opinion, appears to be totally correct and very fruitful. Connected with that is the issue, for the first time, emphasis on horticulture and dairy development. The government wants to bring up very good essential supply of milk, vegetables, and for that, even the matter of transportation of these commodities, connecting it with the railways and special facility to have the railways deliver the goods at a particular destination, and having refrigerated coaches and couriers carrying them is very, very important. This is also in line with the public-private partnership, which is also a very good idea, and therefore it is important that the whole plan on agriculture gets its due and what the government has designed for coastal fishing and giving employment to fishermen increasing the catch of fishes, preservation of fishes, farms for fishing. So a whole new employment generation and a professional approach on fishery is also developed. I think on agriculture, the government has done exceedingly well and laid down a very positive direction on this issue. Another very important point is the government has also thought very deeply on the question of education. Education also is a very important thing, but what I admire is that in this budget for the first time, there is a concept of university and universities which will be imparting what a person likes, what a person specializes, what a person would like to achieve. For example, music. You can pursue now a graduation course, post-graduation in music, in literature, in specialized subjects of your liking. I think once if people realize that what work they do is the work that they love to do and appreciate that work, I think the country will have a great future of its youths. Along with that, the establishment of almost 150 universities, centers of education is very good, and the focus and the idea of making India a center of learning is excellent. And to that extent, we are attracting students from all countries, more particularly developing countries, Africa and other countries, Middle East, students from there, even Far East and Middle East countries can come to India. We have prescribed certain tests, and after going through the education, the foreign students would come to India. This not only generates extra revenue, this also makes India a powerhouse for higher education and an opportunity that in a few years' time, at least 5 of our universities would be positively ranked among the best 100 universities in the world. I think this quality education which the government has brought about, with about 99,000 crores allocated to it, in my opinion, is a very, very positive step. Also connected with this is the government's anxiety to bring about social development and upliftment of the middle class, the common man, and I think these directions pointed out in the budget, socially, economically, and even on the basis of how a nation should develop in the next 10 to 15 years, the roadmap has been very correctly pointed out. On the question of getting resources, disinvestments of governments, companies is a very good idea. And to that extent, the disinvestments qua the LIC is also, according to me, a very positive and a right step. I think so, coupled with LIC and BPCL, Bharat Petroleum's sale, the government should garner sufficient resources and meet the targets. Though the targets for the current years are falling short. We planned originally for disinvestment target of 90,000 crores, increased it to 1,005 crores. Thereafter, we have now targeted 2.01 lakh crores. I think with LIC coming into play, which would be the largest market capitalization company, the government should be able to fulfill the disinvestment target by achieving and mobilizing the resources. Only one point. Let's see, all these disinvestments of government companies, these are actually temples of India. These companies actually belong to the people, and the right thing done is that government is disinvesting and giving it back to the public, allowing public to participate in it. I sincerely hope one thing, that the pricing of an issue, say for example LIC, for the common man, the retailers, should be very low, so that more and more people would come, participate, and this would percolate up to the lower levels of people, bringing them an idea of infusion of money in capital market and in shares and stocks. I think if this is achieved as a target of the government, that you are issuing a shares of a Maharatna at a very less price, then I think people would be definitely attracted. Another very important feature of this budget is the emphasis on tourism and the intention of the government to make 5 or 6 places as a tourism and heritage destination. In this connection, all that I'm saying is excellent idea, make them heritage center, and also please try to link it up with the United Nations and with the World Heritage Center, so that these places in the course of time are listed as World Heritage class of tourist centers, so that this would attract huge amount of foreign remittances, income, and also provide a good opportunity for the youth not only to participate, but also to generate income and thereby employment. In employment also, another novel scheme brought about by the government is that you have engineers. When they come out, the government wants to have an internship. This internship is based on job planning. So once you are there, you are an intern for a specific industry, for a specific job. And from becoming an intern thereafter, you are absorbed in the industry. This also answers the question of unemployment and the question of bringing the right people at the right spot. Please note, today we are not facing the issue of unemployment. It's a wrong approach. The issue is underemployment. I'm not saying that there is unemployment, but there is underemployment. What is underemployment? You are qualified, but you are not getting the right type of job or the right amount of remuneration. And in this connection, I think having this vocational training, vocational centers, internship, and thereby absorbing would be an extremely positive step for the youth of the country. I think India's future would be on youth, and say by 2030 we will be having the largest youth population in the world, And these preparations by the government right from this time, I think, makes a lot of sense, and it deserves the right kind of applause to the government on this issue. I would now come straight away to the direct tax provisions. There are a number of changes made in the direct tax laws. I would deal with about 12 such provisions. And let me explain to you in my way. The first important point is the changes in the rate of taxation. In the rate of taxation, this time what the government has done is the threshold limit is 5 lakhs. So if a person is earning up to 5 lakhs, no taxes, the threshold is 5. Then there are 4 slabs which are broken to a 5 to 7.5, and those 4 slabs, I'm not on the technical point of those slabs. My only point is, I think there was no need to get into so many 2.5 lakhs, 2.5 lakhs, 5 lakhs slabs basis, but that is done. I'm not on that point. I'm on certain issues in the rates of taxation. My first observation is that this rate of taxation for the first time in the income tax history is introduced by way of a section in 115 BAC and BAD. So the rates of taxation which up till now were prescribed in the schedule are for the first time brought in by a section. See, the major change which I want is a dramatic shift or a pragmatic change from a schedule which always has the rates to a section which has the rates. And here the rates are prescribed. Number 2, so this is one point on schedule versus the rates in the section. A paradigm shift. Number 2, for the first time in rates, an option is given. So you have a right of exercise of an option on rates, whether you follow the old regime or the new regime. The condition is that if I opt for the new regime, then I will not be able to get any deduction. The idea of the government is, as the finance minister pointed out, that there are innumerable deductions, almost 100 deductions and exemptions. That also gives rise to a lot of litigation. So they want to do away with the exemption and deductions and prescribe the rates of tax. I would have been more happy if the government would have said that for individuals, all the exemptions and deductions would not be available, and bring down a rate uniformity up to from 5 lakhs to 30 lakhs one slab, 30 lakhs to 1 crore second slab, 1 crore and above another slab. 3 slabs would have been benefited, but for the first time, the question is that there is an option given, and an option is to be exercised. So you will have to look into the options to find out which is beneficial, the old or the new. It's an arithmetic, mathematical calculation. But after the option, I come to the third point. Third issue in this is, there is an employee, and an employee has to exercise this option. he may have to first consult his chartered accountant or an accountant or a bookkeeper who does this arithmetics and tells him which of the two is less harmful. Everybody likes to save money. Problem would arise for companies on deduction of tax and source from his salary, etc. computation in the two methods. Whether under the existing system, under a new system. If you are not claiming any exemption, then no standard deductions, no house rent allowances, no question of computation, all these things. Now, that option for the employee to be correct, he may exercise at the end of the year, not at the beginning of the year. The companies would like to take the step at the beginning of the year. So look at the position. For the employee, he would say only after the end of the year, after seeing all the pros and cons, actual amount that I have received, I will exercise the option. Why? In the case of the employer, it is the other way around. He will have to make it very clear at the beginning as to what option a person is likely to exercise, so that accordingly he would plan and do the deduction of salary, deductions. So there is a contradiction between the employer and the employee, qua the question of deduction, which deduction the employee would like to act at the end of the year, the employee at the beginning of the year, because how to adjust the question of deduction. Just switch off the second button. Then this creates a little anomaly on how to proceed on the question of this option. However, the right of option given with the rates of slabs, for the first time I'm saying these are all very dynamic and innovative ideas. The first idea, bringing it through the section rather than a schedule. Number two, you give an option. Number three, the option to be exercised by the employer and by the employee in consultation to find out which is beneficial. But technically, let me give you one simple mantra instead of going into the slabs which I should follow. According to me, in a simple arithmetical calculation, if in a particular year you are claiming various exemptions, say for salaried people, standard deduction, house rent, leave travel, etc., and ATC benefit. For any person, if the deductions are exceeding roughly 75,000 rupees, 74,000 to be precise roughly, then once you cross 74,000 rupees, then the old system is beneficial and not the new. So this is a mantra which I'm going to place before you. The mantra is, rather than sit down at the end and calculate, you have to look into this one mantra which I'm placing before you, and that is, if you are claiming exemptions over 74,000 rupees, then according to me, the old system is beneficial. Otherwise, the new system should be better. This is on the question of rates of taxes, my first point. The second issue. Now there is e-assessments. Government is extending it to even e-appeals. So now, even appeals before the Commissioner of Income Tax would be in electronic forms. Therefore, you'll have to give a lot of written submissions. Place all the facts before the Commissioner. This is a good position. Let me tell you, even today, when notices are issued by the commissioners, appeals, If you look at the notices very clear, at the end it is mentioned, you may either remain present and present your case or file written submissions. So written submissions, you'll have to give them. Now, in the electronic mode, written submissions are required. If still in appeal, if you want to present the case, you can, according to me, make a petition that apart from this on a complicated issue, I would like to represent and remain present. But another thing, the appeals would now be e-filed. So now all the appeals which are coming up would be e-filed, and appeals would be by e-assessment, faceless assessment, very good. And I think in this connection, even the circulars issued by the CBDT last September, November on faceless assessments are extremely in sign. The circular issued last year in 2019 on faceless assessments, actually speaking, are now given a statutory recognition under the Act in the present budget. So this is on e-assessments. My third point is on tax audit, section 44AB. Now, as the law stands, any person doing business whose turnover exceeds 1 crore of rupees is subjected to tax audit. The government now says that from 1 crore, you will not be subjected to tax audit up to 5 crores. So the limit of 1 crore for tax audit has been increased 5 times to 5 crores. This comes with a rider that in the entire year, there should not be cash payments of more than 5% of the aggregate turnover. Now, the words used are aggregate receipts and aggregate of payments. Government's intention is that we are giving you this benefit provided you are dealing most of your transactions under cashless systems. Barring here and there, therefore the small margin is given, I think it is a very good and a positive step. It is a step where you are going towards an economy where everything is generated purely on the basis of credit cards and on the basis of cashless systems. Only one point, that when you are following a cashless system, even under the existing system, any payments over 1 crore is not allowed. There are restrictions on certain payments over 30,000 rupees in cash. So I think this is a very welcome step, increasing the limit for tax audit. There is one particular point which I wish to clarify. Issue is, everywhere in the budget, etc., it is written from 1 crore to 5 crores. However, for professionals, the tax audit limit is 50 lakhs and not 1 crore. So what about that? And on the issue concerning the professionals, where the threshold is 50 lakhs, not 1 crore. This can be understood that in the budget and in the finance bill, the word or in 44AB, A and B, A is for business, B is for professionals, the word or is omitted. That is all what it says. Once the word or is deleted, then even for professionals, the implication is that up to 5 crores for professionals also, if they fall within the parameters laid down on cash payments, then tax audit is not required. If you look at the memorandum explaining the provisions on 44AB, in the memorandum explaining the provisions, on the very last line on this issue, it is clarified that this will apply also to professionals where the limit of 50 lakhs has been clearly specified. So on the tax audit report, excellent provision. It means that the government is now putting faith in the people, saying that we wanted the tax audit report, now we are trusting you, you come out clean, you don't go into the question of cash transactions, avoid it, come clean, go ahead, make all fair payments, no need to bring extra burden on tax audit. Very good, even for professionals up to 5 crores, there will be no tax limit, provided you comply with the threshold laid down in the section 1, the generation of cash and the payments of, the words there is aggregate. Aggregate means the totality of all the receipts and all the payments. I come now to the fourth issue. The fourth issue is the issue of abolition of the dividend distribution tax. You see, dividend distribution tax is abolished. Companies up till now were paying the dividend distribution tax. Once this is abolished, my first point is, and the first issue is, Section 14A disallowances which were made, computation as per Rule 8D, which artificially brought to tax, whole 14A income exempt goes out because dividend is no longer exempt, it would be taxable. Therefore, the whole mechanism, the whole vehicle of approach of Section 14A gets abolished. In other words, 14A goes out of the statute once the dividend distribution tax is abolished and it comes to be paid in the hands of the individual shareholder. The problem lies on an issue that when there is a dividend distribution tax, first let me point out the mechanics. At present, company paid say 30% tax. Thereafter, dividend distribution tax at 18%. So 30 plus 18 is 48. Plus, shareholders were also paying tax on that at 10%. So that 48 plus 10 would be about 50% of the amount was taxed. In the present scenario, 30% is taxed by the company, whatever that remains, and the balance is taxed at the rate applicable to an individual. Now, the government says in the budget speech that this would take a hit of about 40,000 crores. I'm on that issue that what is the hit? Please note, majority of the dividends are in the hands of people who are in the bracket of 50 lakhs and above, or people over 1 crore or over 5 crores. Big promoters may be having bulk of the shares. Rich individuals would be having the shares. People over 50 lakhs would be mostly investing in shares. Now, look at the issue which I am saying. Same illustration, company paid tax 30%. Now the scenario changes. Over 50 lakhs, 30%, or over even 30 lakhs, 30%. So you are having 30 plus individual 30. Further you go 30 plus 38, 68. 30 plus 42 is 72. 72% tax the government is collecting compared to the old 58%. So actually this figure projected of 40,000 crores hit the government will get, according to me, is not in sign with the mathematics and the arithmetics which I am placing before you. Secondly, it can act as a very big damper to promoters, large investors, because if there is a huge amount of dividend, and it is being taxed, say, at the rate of 38, 42%, then people will lose the incentive of investments, and the companies also, where a large stake of the shares are held by the company, would think 10 times before declaring a generous dividend. They may rather go to buybacks or curb dividends. I think by doing that, it would create a lot of problems. So this thinking on the dividend distribution tax and the amount that is garnered by virtue of this has to be looked into. There can also be another probability. In India, people's mind knows no bounds in finding out ingenuine methods. There can be bogus accounts, bogus purchases of shares in fictitious names, collect the dividends, sell it off. Up till now, by making the corporates pay, what happened was there is 100% compliance. Now, there is no 100% compliance according to me. It would be difficult. The department will again have to track all these possibilities of dividend distribution tax. And connected with that is the issue of TDS, that on dividends which are declared, the company is bound to deduct 10% TDS. So all dividends which you receive over 5,000 rupees, 10% TDS will be deducted. If 10% TDS is deducted, then what is the situation? People who are retired, senior citizens, widows, who had shares and on whom they were getting small dividends, they will now have to file the returns in order to claim the refund on dividends. See, this can act as a little bit of disincentive so far as dividend is concerned on practicalities. I come to the fifth point of the budget on real estate transactions and real estate. First issue is Section 55, cost of acquisition. Under the present law, very good that the government has shifted the date from 1/4/81 to 1/4/2001. What we used to do is to take the valuation as on 1/4/2001 and compare it with the ready reckoner rate, give the valuation at the fair market value and go by it. Now, under the amended 55, section 55, it is provided that it will be where there is a stamp duty ready reckoner valuation available for properties on 1/4/2001. Then the stamp duty ready reckoner valuation will be the fair market value which will be adopted for the purposes of capital gains. So it is only in those cases where you can't get the ready reckoner value that you can apply the valuation fair market value of 1/4/2001. Otherwise, you will have to take the ready reckoner value if it is published as the base on 1/4/2001. Continuing further, another change in 43 AC, 50C, and 56. The issue is that now there is a provision on variation, and very correctly. The government said that if your valuation of the property is varying from the stamp duty or the ready reckoner value by 5%, that 5% is allowed or exempt. That variation limit has been increased to 10%. Very good. Very positive step. However, in my opinion, two things. Number one, in the first place, already the ready reckoner value is already very high. Therefore, this 10% is quite in sign with what is the present valuation. But the government should be saying that this 10% increase would apply even to earlier deals which have taken place in the last 2-3 years. See, property market has come down. Therefore, in order to encourage and see that people don't fall, genuine people don't fall in the trap on valuations. Because see, number of judgments the Supreme Court has made it clear also that the ready reckoner value is not the fair and the final value. It's like a painting. A painting can have different values. It's not, it may be a guidelines, but two buildings situated next to one another can have a very vast valuation differences. Therefore, this 10%, very good point, but make it for applicable because the housing industry is suffering. For the benefit of honest taxpayers, it could be extended. The yardstick could be taken at 10% for the earlier 2 or 3 years also. I come to my sixth point. The sixth point I wish to deal with is the new concept on tax collection at source, TCS. See, TCS has been now brought in on 3 different transactions which I like to deal in my own way. The first one is liberalized remittance scheme. Under the present liberalized remittance scheme, any person is entitled to remit up to $250,000 US abroad every year. So it may be for medical, for buying shares, for whatever reasons. A person can remit today $250,000 US after necessary permission from the Reserve Bank under the liberalized remittance scheme, LRS. Now it is provided that if any individual, HUF, etc., wants to remit the amount, under the liberalized remittance scheme. And if the amount exceeds 7 lakhs, then in that eventuality, he will have to pay 5% tax to the bank or to the authorized dealer who is remitting them. Now, please note that any payment of foreign remittances which exceeds 7 lakhs, you have to pay additionally 5% of the total amount. If it exceeds 7 lakhs, you have to pay, it would be a tax collection. So over and above, this would be given to the authorized dealer or the bank who will be collecting that amount and then remitting it to the government. However, this would act as a credit for the purposes of computation as tax paid. But this is an additional tax collection so that the government would now have a total control on persons who are remitting, the purpose, why, and track it more seriously. Number 2, there is also on tour operators, organized tour operators who organize tours, and if you book for a tour exceeding 1 lakh, then you will have to pay 5% again, which will be collected by the tour operator as tax collected at source. So you will get a credit, but the point is that the government has now decided to find out why tours are taken, how many times it is done, whether such a person is filing the returns. The idea behind all this is accountability. Government wants more accountability on transactions, therefore this track on tour operators. And the third, that if your turnover exceeds 1 crore, and for a particular party you have made a payment of over 50 lakhs of rupees, then on that 50 lakhs of rupees to a particular party, if you have made, you are required to collect TCS at the rate of 0.1% of the amount. So this proves that if there are fake transactions, fake invoices, the government would be able to track all transactions with one party's over 50 lakhs of rupees. If that is there, additional tax must be collected. One point on tax audit, because I spoke about fake invoices and all that, there is one inconsistency which the government should clarify and iron the creases. Here in income tax, the tax audit threshold is increased from 1 crore to 5 crores. Now GST, which is a dynamic new statute going on, here the limit is 2 crores for tax audit under GST. So for a businessman, look at the contradictions. In GST, a person will have to get his books audited and subject himself to tax audit if his turnover exceeds 2 crores. That is the limit prescribed under GST. In income tax, not to have tax audit up to 5 crores. And in tallying the transactions with GST, with the income tax, the problem would arise. Therefore, according to me, a similar clarification will have to be issued under the GST law to increase it to 5 crores, or if under the Income Tax Act, even though it is 5 crores, if you are exceeding 2 crores, better to get the books of accounts audited to bring in synchronization on this issue. It's a thought which requires consideration. Now I come to one other issue where the government has really given a little boost to startups. See, to encourage startups and keep and retain the talent. Today in IT, what we have the problems? We have the problems of retaining talent. Because what is important for an IT company is human talent, not mortar, buildings, plant, or physical assets. In such a scenario, to retain the talents, companies issue ESOPs, stock options. Under the present law, the stock options were taxed at the time of allotment itself. Realizing the liquidity crisis and the problems that it is only on allotment that I have to pay the tax, very good position. The government has brought 3 conditions. Namely, that you can pay the tax after a period of 5 years. Or number 2, when a person ceases to be in employment. Or number 3, when he sells the shares, whichever is earlier. Very good provision. However, this applies only to startups, not to other companies. I think so gradually the government should extend this provision to all companies. Very logical sequence of the section, and I think it is better because, as I'm saying, today the main problem facing the corporates, apart from liquidity crisis, is the retention of human talent. And in this modern age of technology with artificial intelligence, data, cloud computing, companies require to retain and therefore to attract talent, retain them. Stock options are being offered, and therefore it is a right step which the government should extend even to other industries. My 9th point, which I'm dealing with it, is trust, charitable trust. You see, there are a number of charitable trusts which are established long ago. They are registered under the Bombay Public Trust Act, under the Regional Public Trust Act. They have a Section 12A certificate. Now the law says that first, if any new trust comes, it can make an online application for registration. The online application for registration, automatically the registration would be granted, and then it would continue. For old trust, it is necessary that this application is made in an e-form, and e-filing of registration forms is required by all trusts. Formally under the law, the registration certificate under 12, now 12AA, would last forever. Now it says it will last for a period of only 5 years. And you will have to get it renewed every 5 years. 6 months before the expiry of the 5 years, you are required to make that application and get yourself registered to ensure continuity. I see nothing wrong in this provision because this is done to weed out fake trusts. And connected with that is ATG certificates now required that you should give full details of the donee. And that details would be pre-filled in the forms of the donees so that there is a match between them, good provision, because people who want to give donations and take the benefit of ATG would now have to look into that these donations are correctly made, and the trust will also have to monitor and cover up all these particular issues so that these are properly channelized. My 10th issue is the change in section 6 in the definition of resident. It's a very, very tricky and a difficult section for interpretation. See, under the present law, if any person stays in India to be a resident, he has to stay for more than 182 days. Of course, a resident 365 days, then second test is over. He has to stay in India for 182 days. And then there is another test, 4 years and 7 years stay, 365 days, etc. We are not on the test. Important point is that under the present law, person has to stay in India for 182 days. People were planning in such a way that they are residents of India and staying in India for more than 182 days, and the remaining period they were spending in Dubai, Singapore, etc., and carrying on business. Now the law requires, let's see, if you want to be declared as a non-resident, then the test is that your period of residence in India is increased from 182 days to 245 days. Only if you stay in India for 245 days, then you are a resident, which means that the period of stay of abroad is now automatically enhanced in order that you become a non-resident. This is in order to curb people who are planning their visits out of India, still continuing to show their status as India, and therefore not paying taxes of income earned outside India, being shown as non-resident. To become a non-resident, in short, you require that you should not stay in India for a longer period, but you should stay for a larger part of the year outside India. This is one general point. But I am now dealing with another issue, a tricky issue of deemed Indian residents. In explanation to section 6, a section has been introduced, provision has been introduced, that if a person is resident in another territory, of which that territory does not declare him as a resident, he is also not a resident in India, he is not a resident of that other country, then in such circumstances, such a person shall be deemed to be an Indian resident. So the first time concept of deemed resident has been introduced in the Act. What is the implication? General implication is, supposing take for example, a man is working in UAE or in Saudi or a place, any other place or a territory which does not accord him a residential status. But he is resident citizen of India. So he is not in India even for the required period. Then the implication of that is what? That he is deemed to be an Indian resident. If he is deemed to be an Indian resident, then automatically he will be liable to be taxed on foreign income which is earned in Dubai or UAE or in Saudi in India. This is the general interpretation of the explanation to section 6, literal interpretation. Now, after that, on Sunday, a press release was issued. In the press release, they said that these are points which were not saying, it will be clarified. On Sunday night, a clarification was issued. However, in my opinion, the clarification does not clarify till date. The position, according to me, as things stands now, on a literal interpretation, is that even people who are residing abroad and who have no residency status would automatically be taxed in India as deemed Indian residents. So what is the way out, if at all? My first possible point is that under the treaties, there is a provision of tie-breaker. So the doctrine of tie-breaker applies that if you have a house in those countries where you are residing, then technically you are a resident. So the tie-breaker theory will have to be applied. And along with that, such persons would have to apply in those countries and in India the certificate for test of residency certificate. So you will have to apply for the residency certificate, get that certificate. This would involve unnecessary expenses too. See, an ordinary laborer from Kerala has gone as a mason, carpenter, etc., earning 2 crores of rupees, expenditure 1 crore, 1 lakh remitted to India. Would he be taxed on that 1 lakh? It would make a lot of difference because, please note, India is one of the few countries in the world almost on the top which is receiving foreign remittances from its residents situated abroad. That resident amounts coming to India could suffer because of this provision, and the application for test of residency would also incur expenditure, but I think then people will have to take the residency certificate and then apply in order to get the exemption. So this residency clause can create some hiccups. I think it requires some clarification. A proper CBDT circular should be issued and clarification should be made. My 11th point is Vivad Se Vishwas scheme, which the government said was very useful and helpful in indirect tax, is now being brought in the direct tax. Under the scheme, good scheme, it says that if there are any pending litigations at any stage and you have tax, always there is tax, interest and penalty. If a person pays the entire tax amount, then there will be no interest and penalty. Disputed demands which are pending, if you make the payment of the tax, then there will be no interest and penalty at all. Good thinking, good provision. I have 2 important issues for consideration. The first issue I want to deal very carefully. Government tried its best and brought in demonetization on 8th November 2016. Prior to that, government gave an opportunity under this scheme that if you declare it and pay 45% tax, then on the balance there is no tax. The demonetization which took place on 8th November 2016, year ending 31st March 2017, people, whatever they wanted to declare, all their assessments have got completed on December 2019. So for those people who have declared the unaccounted money, mostly through wrong sources, unaccounted money, unaccounted investments, demonetization, benefits which they were trying to take, have all declared their assessments are over. For those people, it is a good scheme that you pay 30% up to 31st March 2020, get away with it. Beyond that, the government says something additional will have to be paid, but there is no interest and penalty issue. See, earlier in the first scheme, the government brought about the amount for paying the immunity was 45. After that also, second scheme was introduced where the amount was you pay 60% and get away with it. Now in this Vivad Se Vishwas, all those people who did not declare, who are tough, who said we'll declare it in the return, see what will happen, did not pay at 45%, did not pay at 60%, today such people will get away with 30%. 30% tax, no interest, no penalty. Formerly 45%, no interest, no penalty. 60% pay, no interest, no penalty. Now 30%, no interest and penalty. Good premium for those people who had taken a risk. I'm saying that this is a very good scheme. But I'm also saying it gives an advantage for those bold people who did not declare, but showed it in the return and whose assessments are completed on December 2019. For them, the scheme is good, but it is on tax parity basis, little bit unfair. My second point is, appeals pending at any stages, you pay the tax. There are many instances of high-pitched demands. Sometimes turnover is not accepted, entire turnover is added as income. Sometimes entire receipts, sales added. What about purchases? Or a gross profit margin ratio of at a very high percent, which is not in line and conducive with industry standards. Or say, in transfer pricing cases before the DRP, comparative instances and other things have been made, making a very high-pitched demand. In such circumstances, on high-pitched demand, people would not go for the scheme and pay the tax because the tax would be too high. They would rather say, we will litigate. So this area of high-pitched assessments also requires to be considered in a pragmatic way in order to make the Vivad to Vishwas scheme a greater success. But anyway, it is a very bold and a correct step taken by the government, and such schemes should be brought because Section 68, unaccounted income, unaccounted cash credits, bogus purchases, share capital, application monies, all those cases may, in my opinion, get weeded out. They may not have any benefit in litigating. It is better at this stage if you go ahead and make the payment of taxes. My 12th issue is that the government for the first time is thinking about bringing a tax charter, a tax code, a tax charter in the Income Tax Act itself. There are various progressive economies of the world which have the tax charter incorporated into the act. Countries which have incorporated under the act, which gives taxpayers benefit, is US, UK, Canada, others Belgium, many countries, progressive dynamic countries. By bringing in this issue of tax charter in the Income Tax Act, which will be notified, taxpayers' rights, taxpayers' obligations, how the government would also honor its obligation, benefit to the honest taxpayer. I think the government is trying its best to assure the individual taxpayer that there would be no harassment. In the budget speech, the finance minister at 2 places and 2 times emphasized the value of an honest taxpayer, that there would be no harassment to the honest taxpayer, and that the government respects the wealth creator. The government should also realize one very important point, that if Indians are rich, then India is rich. And in this connection, the tax on individuals on the higher slab at 38% and 42% definitely requires consideration of the government for reducing it. Because you see, you look at the level playing field with the corporates who are having 25%. And now with the individuals, it is 40. It is the individuals who are driving the corporations, and therefore it is very much required. My 13th point is that there is restriction and curbs on the powers of the Income Tax Appellate Tribunal in matters of stay. According to me, I'm very much disturbed and perturbed by putting a restriction on the powers of the tribunal. Settled law that stay applications before the tribunal. The tribunal had a discretion, looking into the totality of the position, grant you a stay. It may tell you to pay the amount, it may expedite the appeal, but the power was there with the tribunal. It's an inherent power. Now they say that the stay would be granted by the tribunal and 20% of the impugned tax interest would be paid. Now let me tell you, Income Tax Tribunal is the mother of all tribunals. The Income Tax Tribunal has wide powers, wide discretion, and it is exercising and discharging the function in the most efficient manner in looking and evaluating certain things and then granting a stay or giving decisions. To put a restriction and a clause on the powers of tribunal to say that in such cases also the stay is granted subject to 20%, in my opinion, is totally unconstitutional. Please note, take a case where in my own case, the issue is decided in my favor. Yet, the CIT appeal and the assessing officer would say that we have carried the matter to the High Court, until the High Court or the Supreme Court decides, we will not give you the relief. There are a number of such cases, more particularly in the DRP proceedings, under transfer pricing in particular, where they say, no, in these matters, even if this, you have succeeded, we will follow the old ruling and disallow it till the matter attains some nature of finality. So you have two types of demands, tested demand and untested demand, as I call it. The tested issues are already decided by some forum like the tribunal. Now to say that CIT has disallowed on the ground that we are keeping the issue alive, as was the case in number of cases where depreciation was not allowed to charitable institutions. They said that the matter is pending in the Supreme Court, therefore we will follow the old judgment. The tribunal granted a reasonable stay on the ground that this issue is covered by decisions of tribunal, or even in your own case. No such exception is pointed out. And to say and put a curb on tribunal's power in genuine cases, according to me, is unconstitutional and requires a little bit of consideration. Therefore, if there are high-pitched assessments, prima facie wrong assessments, or if there is a situation where an issue is already covered, or if there are series of judgments in favor of the assessee, but no decision of jurisdictional high court, or if there are conflicting decisions without there being a jurisdictional judgment, I think in such instances, the power should be given to the tribunal, in all fairness, to exercise its discretion judiciously, correctly, and most appropriately in a fair and an equitable manner. By not allowing the tribunal to do so and putting a curb that whatever the tribunal will decide, still you will pay 20%, I think, in my opinion, is unconstitutional, and the government requires to think over this point in all fairness. My 14th point, which I would like to deal, is the amendment in section 56 and 57 on interest payment. This is connected with dividends. Now, what is brought in is that if I have borrowed some money for the purpose of business, I was allowed at present full deduction if it is for business purpose under section 36(1)(3). Series of Supreme Court judgments starting from Rajendra Modi and Kochar and number of tribunal judgments and High Court judgments that such expenditure on borrowings are allowed. Now it says that when dividend is declared, the restriction would be 20% of the amount declared. So in other words, they are putting a cap on the amount of interest which would be eligible for deduction. Let me give you a very simple illustration. Take, for example, a person wants to make an investment in 100 shares of Reliance. Say the price is 1,500 So he purchases the shares at 1,50,000. Now this amount of 1,50,000, he borrows it from the bank, say interest is 10% and the interest outflow is 15,000. Now, say Reliance declares a dividend of 100%. But the dividend is declared on the face value of shares. So it gives you, say, you get a dividend of 10 rupees, 1,000 rupees on 100 shares. Now look at the issue. I have spent interest outflow 15,000. I would be allowed 20% of 1,000. The comparison, look at the comparison. How will I be able to offset this? This means that original decisions of the Supreme Court starting from Rajendra Modi, all these decisions have been overturned and are no longer good law. My 15th and the last point is, there is a new tax, according to me, on perquisites. It says that if a person is getting perquisites and on these certain perquisites, the amount exceeds 7 lakhs of rupees, then such perquisites would be taxable. So if you are earning 40 lakhs of rupees salary and there are perquisite benefits which works out to say 10.50, if you take standard deduction, if you take house rent allowance, pension funds and all these things, then 10 lakhs. Why that? 7 lakhs, 750 would be allowed as a deduction. On the balance, you will have to pay the tax on the perquisite. So indirectly, I am now coining a new term. And this term is that now the government has brought about a new upper middle class tax. This new term which I have coined, upper middle class tax, is applicable to those salaried employees who are earning and whose perquisite value will be taxed. I think this, in my opinion, requires reconsideration. In short and in sum, this budget, if you ask me on the direction points, is a big directional budget. I would give 100 out of 100 on the directional points. The mapping of the future is very good. The implementation requires desired results. Even points like environment, climate change, crop protection, everything is covered. The roadmap for countries' future is very well planned. But if the government has more faith in the citizens of the country, if taxpayers who have paid tax honestly are honored, then in such situation, certain points brought out in the budget require some clarification. Some, as I'm saying, you ease the creases and filter out points which can be irritant to an honest taxpayer and still think over reducing the tax on the individuals, the high net individuals, on a level playing field with corporates. But on the whole, with this budget, the country at least has laid down some foundation for a 5 trillion economy. Jai Hind.
The first one is by Mr. Krishna Monish. The question is, how is the AGR going to impact the new tax rule?
No, it will not have any significant impacts at all.
Ms. Sheetal Mistry, how will changing payments of dividends tax from the companies to the end shareholder help? Will this not just make matters complicated and move people higher in the income tax slab?
Yes, according to me, as I pointed out, it can lead to a higher tax and a higher burden on the individuals.
Mr. Alex, the government claims that the budget must be looked at from the macro level and all precious charges, including this budget, must be considered. But at a time when the economy is facing one of its biggest slowdowns, do you think the budget did enough to raise sentiments?
It has not done much to raise sentiments, but that path of direction shown is very good. If implemented, then I think so you will get results on the macro front also.
Mr. Santosh, what are your thoughts on the removal of various tax exemptions and deductions? Will this affect the spending power of people?
No, the question is, I would have rather thought of this way: you remove the exemption and lower the rates of taxes. That would have been much better than dividing into so many brackets and keeping the tax rates same.
Ms. Deepal, what is the main theme of Budget 2020?
The main theme of the budget 2020, I think, is the emphasis on caring the Indian citizen, social welfare, trust to agriculture, and planning out the roadmap for a 5 trillion economy.
Mr. Sachin, the government has increased income tax brackets and reduced exemptions, in my opinion, effectively changing nothing drastically, as they both would balance out. What are your thoughts on the same?
Yeah, I think this is balanced out. There is nothing much on that point at all.
Ms. Shobha, the gems and jewellery sector employs around 5 million people. Not being able to revive the industry through the help of the government is adversely affecting 5 million people. What steps should the government take, in your opinion, to help this sector?
Yeah, nothing has been mentioned on gems and jewellery, which I'm a little bit disappointed. They should have mentioned, given some concessions, some exemptions, even in customs, exports, nothing is given. But one point, no specific benefit to senior citizens, no specific benefit to women. I think one point requires the government's consideration. First, that if there are senior citizens who have worked, you can put a threshold of 70 years or so, lower down their limits of tax. Take, for example, even women, working women, professional women, some benefits must be given additionally, like maternity benefits, etc. There, give them a lower rate of taxation, very much required.
Ms. Anita, the stock market slowdown represent the public sentiment on the shortcomings of the union budget. Would love to hear your thoughts on it if you share the same sentiment.
See, stock market behaves in its own way. There is no mantra how the stocks will move. Even if there is a good budget, the stocks may fall. If there is a bad budget, the stocks may move. So that is not a mantra. But I think so, abolishing dividend tax, taxing the individuals, and no specific impetus to industry, what they wanted, benefits, exemptions, is not coming forth, and that is why maybe the market has taken it negatively. But this is not a, see, the whole point was, originally we said, a proverb, the stock market is the barometer of the country's economy. That proverb no longer is applicable to India. Here, even if the economy is bad, the stock market rises. So please don't confuse the budget with the stock market.
Is Budget 2020 populist or reformist, Ms. Deepal?
It could be regarded as populist to a larger extent, because middle class people, see, this standard deduction and this rates of taxes would be very beneficial For the people who have no such savings ideas or who are coming first time in the market, for them, if they have no benefits, no provident fund scheme, for them it would be beneficial. Realistic would be that because the long-term implications is important, but the mantra is implementation, how it is done.
Mr. Rajesh, what are the benefits for startups?
I explained to you that the benefits is only on that ESOPs, plus they have given a lot of deductions, no tax incentive, holiday period is extended, very good. Good startups will have good benefits. Go ahead. The full series of questions, I look into it. Go ahead.
Mr. Sachin, growth has gone down to an 11-year low. Do you think this budget had enough to give the economy a revival, or was it lackluster?
See, the growth, I think so. We don't have to go too much into the growth factors. I'm not on that 5%, 6% growth. These are all factors and figures. I think so. What we require is that if companies and industry and sector just grow up, and if more individuals are employed, and if we have made in India, available in India, as the survey pointed out, then I think it would be a very good trust. One day before, the survey was presented in the parliament. I think very good points mentioned in the survey. Many of them have not crept in the budget. But I'm not on the growth figures. These figures vary, but I think that sure today, India is a very strong economy. I would rate Indian economy amongst the first 5 in the entire world.
Mr. Sachin, how will this progressive tax strategy of levying high income tax to high earners affect the amount of black money that is in circulation?
Now, the black money is a different issue, but what I'm saying, higher taxation would yield always less results. But see, this higher taxation is for individuals. It's not for companies. So it would be a few individuals, if they want to cheat, that's their view and their point. Otherwise, okay, go ahead.
Mr. Ganesh, how will Aadhaar-based verification for indirect taxes be complied with for the public?
Yeah, there is an important point. You see, we have PAN and Aadhaar. Now what the government has brought about is very good. If you have an Aadhaar, then automatically you will get a PAN. There was first a linkage between PAN and Aadhaar. Now if you have an Aadhaar, then automatically within 15 days, electronically your PAN will be generated. Good thinking.
The government, Ms. Anita, the government has introduced a TDS to all e-commerce transactions. I truly feel like the government is trying to monetize every aspect it can, and this is hurting businesses today.
Yeah,
what do you think of this?
E-commerce, I think so, has become and grown so large, and with so many foreign players also coming, Indian players also there, I think some curbs and restrictions have to be taken, and therefore I think, according to me, the steps taken by the government to some extent are positive.
Mr. Santosh, the lack of focus on the auto industry's revival of demand will definitely affect the industry severely. What are your thoughts on this?
See, on auto industry, let me make it very clear. The auto industry, first of all, is not the only main industry in India. There are many other industries. But auto industry was suffering. Now there are a new trend on electric cars, therefore electric motors. Therefore, there is a whole shift in the approach even on automobiles. Automobiles as a sector is not getting any cogent benefit. But according to me, two-wheelers and other companies are doing pretty well. Let me tell you, government is trying its best to give some benefits to automobile industry. It depends on company to company. Take for example, if I can take the liberty to even specify, Maruti has absorbed all these shocks very easily, and Bajaj Auto has in fact also very bravely waved out the entire problems of auto industry. So it is company specific more rather than you are talking about the industry specific. Go ahead.
The gems and jewelry, Ms. Sheetal, the gems and jewelry sector has been looking for a break through this budget to help it revive the industry. Instead, we receive an import tax on gemstones. Do you think the government has stopped looking at the sector? This sector still accounts for 7% of India's GDP.
It means that your representation with the government is not very strong and your lobby is not very strong. You should have canvassed it much progressively. Then you may have got the benefits.
Ms. Poonam, mutual fund, else scheme, rupees 1.5 lakhs in a year will be valid after 1st April 2020.
Yeah, this will all be, if you are taking the benefit of that scheme and going into it, then you will not be able to take those 4 slab rates because there will be no deduction. Go ahead.
Mr. Bhavesh, what are your thoughts on people being able to choose which income tax structure they would like to follow? Would this not make things complicated?
Yeah, I already pointed out and gave you a mantra that if you are taking exemptions over 74,000, then the old scheme is beneficial, otherwise the new scheme.
Mr. Bhavesh again, this will allow people higher in the income tax bracket to pay less tax.
Not at all, not at all.
Mr. Alex, hello sir, I am an NRI in Dubai in the diamond industry. I get a fixed salary every month and was wondering how this budget will affect me.
Alex, there should be no problem according to me. I think government would come out with some clarification that your salary is not being taxed in India. You don't have to go on this deemed resident for Indians for the time being. Think positive and I think you continue your work and go ahead.
Ms. Poonam, DDT is removed and the dividend is liable in the hands of the shareholders. Is it good for the shareholders?
No, I would say it's not good for the shareholders. It's good for the corporates.
Mr. Bhavesh, Mr. Firoze, the increase in tax on import products like furniture will affect companies like IKEA and deter them from looking...
Today, there is a clarification in the newspaper that there will be no impact tremendously on furniture.
Mr. Sunny, what is your opinion on the taxing of dividends and introducing of TDS being deducted on the same? People who relied on dividends as a source of income will take a big hit.
They will take a big hit, the answer is.
Thank you so much, viewers, for viewing our webinar. Thank you, Mr. Andhyarujina, for sharing your valuable time and expertise and providing us a clarity about the implication of the budget 2020. If you have any further questions, please email us info@gematlas.com, info@gematlas.com, and we will definitely pass it on to Mr. Andhyarujina for it to be answered. Thank you and have a good day. Thank you so much, Mr. Andhyarujina.